Hello, my wonderful people. We're back again today with another banger strategy. And sorry, I've been a bit offline. I've not been feeling well. But today, I just want to do a 10-minute strategy. I'm not taking much of your time. Just a simple 10-minute strategy for catching spikes on 1 minute time frame. And we continue using the TDI as our main indicator. So, and mostly within the TDI, we will be checking the RSI. And this time around, we are adding another new indicator. I will be giving you the settings at the end of this video. So we will be adding a MACD, okay? We are adding a MACD. So for the TDI indicator, as I said earlier, in my previous tutorial, you can always join our Telegram channel to check to download the TDI, the settings for the mobile. There's also for the MT5 and for the MT4. That is for the TDI. So on this video, maybe I will cover just the TDI settings, and which is on the third window. Okay, what I'm talking about on the third window is this here. So this window has a MACD. Okay, so this blue line that you're seeing is an RSI 21. And whatever you're seeing, this other one with the bars is a MACD with the settings of 12, 26, 1. Just simple like that. I think it is the default setting 12, 26, and then you change the 9 in the default setting to 1. I'll give you the proper settings. And then the RSI value of 21, which is this blue line, I mean. So we will not be checking much what is happening on the main window, but we will be checking what is happening between these two indicator windows, the TDI window and the MACD window. Okay, so anytime you find the MACD is facing up, you know the market is on an uptrend. Okay, so if it is facing up and you want to catch the spikes, it is much easier. But sometimes you may not be able to know where the spikes will come. Though on my main window, I've added an Ichimoku, but I will talk about Ichimoku in another video. Okay, so the Ichimoku will help you, like the sky, the lime green line on my main window. This here is an Ichimoku line. So anytime the market is on an uptrend, you will always expect when it reaches that Ichimoku to spike. I'll give you the settings of the Ichimoku also. So when we are on an uptrend, you will mostly use an Ichimoku, and you will also use the TDI. Do you see our TDI? Every time it reaches either the middle Bollinger Band or this, it reaches that sky blue line, which is the moving average 2. Here also, moving average 2. Here, the middle Bollinger Band, which is the market baseline. Check here again. Sorry for that. Check here again. Middle Bollinger Band, which is the market baseline. So in a trending or an upward trade for spikes, which is boom, this is boom 500. For an upward trend for boom 500, you will either use the Ichimoku now, which is this. You see, anytime it touches, it spikes. Anytime it touches, it spikes. You see, anytime it touches, it spikes. And then here, it was just like 3 candles, and then it spiked. Okay, and on the main On the TDI window, it reached the middle Bollinger Band, which is the market baseline. It spiked. Here, it just crossed a bit the moving average 2. It spiked. Here, it reached again the moving average 2. It spiked. And then here, it came to the middle moving average, which is the market baseline, middle of the Bollinger Band, and it spiked. So in a trending market of spikes, know that you will use the Ichimoku on the above main window setting, or you use the TDI. Anytime it touches the moving average 2 or touches the middle Bollinger Band, know that it must spike as long as we are on an uptrend. Okay, so that we've covered for an uptrend. Now let's come back for a downtrend. You see, it continues spiking, and it will always spike. It will always spike either in the middle Bollinger Band or at moving average 2. Or let me bring my previous arrow, which is this. I want to move with it, but it's becoming difficult, so let me just pick another arrow. I want you to see here all this. It's just way a bit, forget about the other moving averages that is down. This here. So the purple line is the 26 of the Ichimoku, and the green line is the green line is the 9 of the Ichimoku. So it will spike either at the 9 Ichimoku line or at the 26 Ichimoku line. Okay, any one of the two will act. So like here, it passed the 9 Ichimoku line, but it came and spiked at 26 Ichimoku line. It's all in the same one Ichimoku, like Tingun-sen and Kijuspan. Okay, so the upper value is 9, the lower value is 26, and then the down value is 52, but we never use that when you are using Ichimokus as the moving average. So it will always spike at the value 9 or spike at the value 26, the second Ichimoku line, but it is one Ichimoku. It's not two different Ichimokus. Okay, so that is when we are on an uptrend. So when the market starts reversing and coming down, I want you to see this. You see it's still spiking around the same area, either Ichimoku 26 or Ichimoku 9. Now, when the market has become exhausted and it starts coming down, you can always scalp, but I will talk on scalping later, because I know I don't want to bring people so much into scalping, like buying, like, selling when we are in boom. Why? Because when we are caught up by a spike, it may wipe your account. So I mostly love to trade spikes for my own safety, and I also have strategies for scalping, but that I will be a bit sensitive on giving out, because if a spike catches you, you will blame me, and I don't want that. So let me just focus on those strategies that will be giving us spikes. Now we are done with the trending. We are coming down for the normal spikes during an ordinary time when it is not trending. Let's come to the lower window. When you see this MACD was on the up side, which was uptrend, when it started going down, understand that this MACD is placed on top of an RSI window. Okay, and the RSI window has the values of 90, 75, 50, and 25. Okay, so and 10 down here. So anytime the moving average of the MACD, which is the red line, moving average 1 of the MACD, has touched level 10, which is level 10 here. So if MACD comes to touch level 10 and this RSI is around level 50, is between level 50 to level 25, like it's not on the extreme at the same time with the MACD, like at the level 10. If both of them are at level 10, that should be an indicator to you that it is a trending market and it may trend for long. So avoid placing a trade. But if MACD reaches level 10, yet the RSI is still way far above, like it was not basically in a seller's area, you know, like overbought or oversold. So know that the market will spike. Like at that time, we are not in a region where the resistance is very tough or the trend has been established very strongly. Okay, so let's check here. So down here, you see the MACD has touched level 10. Let's see. I would place my trade around I want to pick a line. So around maybe this place. Okay, the red line. We move. How many candles were we able to get from there? Sorry, I even don't know where my line has gone to. There. And then, oh, it moved down. Okay, I understand. So where our arrow is pointing down is where we were supposed to have placed our trade. Let me go back a bit to be able to bring the line to the exact point, because I placed it way down below. So it's supposed to be there where this MACD is meeting at level 10. Okay, so let's go. How many did we go? Immediately we placed a trade and the first spike came. But mark you, as long as this RSI 21 is still within this area, which is not the overbought area, yet the MACD has reached this extreme point, know that it must spike. So this small baby spike that we got is not the real spike. Just hold on, okay? Because you see, even in the main chart, which is now the TDI, no, the indicator window TDI, the TDI has reached, is just outside of the Bollinger Band, the lower Bollinger Band, but not way far, and it's not even reached level 30, which is the oversold. Okay, so this MACD is to show you that we are ready to spike, because we were not like officially oversold. Like we've reached a place where we can spike. So let's see. So we've placed our trade in this red. Let's see how far we'll go. There, boom. Did you see that? Did you just see that? And it is a very big spike. Wow. So at that time, we were on a deficit of like around negative of just 1 or 2 candles, and immediately a massive spike came. Okay, so if that does not convince you, let's continue and find another setup. So rule number 1, you have to see that the RSI 21, which is this, must not have reached like the overbought levels when the MACD is touching level 10. Okay, so let's continue. Not yet. There. Did you see that? So here. So it's touched, and it's almost the same area where it spiked again last time. So let's see. Did you see that? Wow. As long as this RSI is not at the overbought level too much, like when a trend has been established, you can find that you will not be able to use to use an RSI for the overbought levels. Like when the trend is so strong, try to avoid going into the market. So we want to find sensitive areas where a spike can happen without the market being on the extreme overbought and oversold. Okay, so did you see that? Like if you were to place the red line here on the main chart, sorry, I don't know whether I'll be able to get back to that exact place. Can't remember. But you saw what happened. You saw what, this is a trending market. In a trending market, you use the Ichimoku 3 and no Ichimoku 9 and 26, or you use the TDI on a trending market. Okay, on a trending market, you use Ichimoku and the TDI, but now on weak resistance areas like what we were doing, you use the MACD. You use the MACD and the RSI 21. This is what I was talking about. This is a very good example. Okay, so let's come. You see in this area here, we've reached our MACD is going to touch level 10. Let me bring an arrow. Our MACD is going to reach level 10, but still at the same time, our RSI is already at the oversold level. Sorry, I don't know what happened. Oh, my chart was still moving. Okay, so we've lost that. Going to the extreme. It went to the extreme. I was trying to show you over level. Look here again. Look here. We touched and boom, it spiked. Okay, we touched and boom, it spiked. Another very good indicator that I want to give you a pro tip. Come to here within the TDI. If the MACD reaches level 10, this is for boom. For boom is level 10, for crash is level 90. It would be exact opposite of what we do in boom. So for crash, it must reach level 90. For boom, it must reach level 10. Okay, so when it is touching level 10, come back into your main window, into this main window, and see if our TDI, was it the Bollinger Bands come together like trying to squeeze to show you that we are starting a trend. If it had not squeezed, then you know that we are in a ranging market, because this strategy that I'm giving you works best in a ranging market, not in a trending market, like a trend has been established. So if you find like the lower Bollinger Band of the TDI is around level 30, the middle Bollinger Band is around level 50, and the upper Bollinger Band is around level 70. And you see from this area, it was equal, all the way equal. It's just here that it passed a bit. So it tells you we've not been on a strong trend, because if we were on a strong trend, this Bollinger Band would have been very squeezed and small, and you would be seeing it moving from the upper side, which is the buyer's area, into the seller's area, and the Bollinger Bands are very small. Like, you know, we are in a very strong trend. I don't know whether you understand. So as long as the Bollinger Bands are like in a straight line like this, and the lower Bollinger Band is around 50, the middle Bollinger Band is around level 50, the other one 30 and whatever. So it tells you it is like a normal Bollinger Band. So it is a ranging market. Okay, so this strategy specifically is for a ranging market. And you see immediately the MACD touched level 10 here, and see what happened on top. In fact, you got three massive spikes. So understand that this strategy that I've given you today, when the MACD touches level 10 for boom, or touches level 90 for crash, and the market was not trending, it was a ranging market. Okay, like no strong trend had been established before. No strong trend had been established before. Okay, so you can confidently place your trade. You will be on the deficit side for like 2-3 candles, but mark my words, it will spike, and it will come a massive spike. Okay, make sure when you get that spike, it must cover like around 20, 50, between from 15 to 20 or even 25 candles. Like for this instance, it covered around 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25. So just these candles in the main chart is 25 plus almost 30. So as long as it touched level 10, this here, it touched level 10, and you've confirmed from your TDI we were in a ranging market, then know that the spike must come. Okay, so that was another point. Let's look for another one. Look here again, this one. Let's go back with the elevated Charlie. As we continue scrolling, there. So there we touched. Did you see that? We touched, and our RSI 21 is way far from 25, which means we were not on a very strong trending market. And immediately after that, a spike comes. Did you see that? Okay, we go again. This one it had not reached, so we cannot say it was a valid signal. Let's go again. Let's go. That one it had not reached also, so we cannot say it was a valid signal. There, and did you see we've reached? Let's see if that is a right trade for us. And we were not on a very strong market, but check here, our Bollinger Bands, the lower Bollinger Band was not touching 30, and the upper Bollinger Band is not touching 70. So if this trade will not work, is because from our TDI here, it shows you that we may not be in a trending market. Okay, no, I mean we may not be in a ranging market. Okay, so let's see. Did you see that? So we've touched, but it didn't spike. Why? The TDI had shown us that we were not on a ranging market. Did you see that? So be very careful. Be very careful not to place a trade when we are not in a ranging market. This strategy works for a ranging market. Okay? And you see, if you had placed, you would have been in deficit for a very long time. Let's go to the first time that it touched, and then we place a line there. So let's place a buy line. Let's say we bought there, and then we continued. You see how many minutes or candles you had been on deficit? That is a lot of candles. So make sure you check your trend very well. Make sure you check your trend very well. Okay, and you see we are still going down. We're still going down. Okay, so another pro tip that I can give you is I think I touched on divergences last time. If the main chart is not correlating with what is happening on the RSI or the peaks of the TDI, know that some spikes will be coming. Okay, but for this time I'm not going to touch on the divergences. I just want us to focus on the TDI strategy for today. Okay, so let's continue. Please note again that at this time our MACD our MACD, this one here, is facing down. And anytime the MACD is facing down, it tells you we've been on a downtrend. So you have to be a bit careful, though the trend will not be very strong because we've seen a few spikes, so we are not in a very strong trend, but at least we are on a downtrend. So you have to be a bit careful on that. Okay, so let's go, let's continue there. But at this time, we are seriously on a downtrend. So I wouldn't advise you, though I know it will spike, but it will not be a massive spike like the one for a ranging market. Okay, you see it came, but it was a small spike because we are officially on a downtrend. Okay, so you have to be able to check that. You see, 3 spikes has come, but it is spikes that are struggling, like not very strong spikes, and so it's not giving you much profit like if you would get that same setup in a ranging market. Okay, so let's continue there. You see it's touched again, but again we are still on a downtrend. You see, so it's touching but it's not spiking. That's why I wanted to bring out that very strong point that this strategy works only on a ranging market, and especially if on our TDI window the middle Bollinger Band is around area 30, the upper Bollinger Band is around area 70, and the lower Bollinger Band is around area 30. No, the middle Bollinger Band is 50, upper is 70, and down is 30. So that will be a good setup when MACD touches level 10. Okay, so that was it for today, and I hope to still bring you more strategies in future, and hope you utilize this strategy, and please get in touch with me. So to download the TDI settings, let me just do the settings here, not for the TDI but for the leave the moving averages alone. I want you to focus on please take a screenshot. This is our Ichimoku that is on the main window, the Ichimoku. Leave the Cinco span of 80. That one you can put it to whatever you want. So what we are using here is level 6 and level 14. Okay, but let me change this. Yeah, you can use level 6 and 14 or use level 9 and 26. Tekken-sen, level 9, Keiju-sen, 26. So anytime in a trending market, anytime the market will reach level 9, it will spike, or reach level 26, it will spike. Okay, that is for this, what is on the main window. For the TDI, please join our Telegram channel to be able to download the TDI settings for the mobile and desktops and the PC. Now let's go to the MACD window, the settings for the MACD window, which is this down here. This is our MACD 12.26.1. 12.26.1. The pixel, you can always put your color, signal your color, but the settings should be 12.26.1 for the MACD. And then for the RSI, it is this one here. So it is level 21 to typical, apply to typical price HLC/3 styles, pixel 1, whatever color you want, and then levels. Make sure you do levels 90, 50, 75, 25, and 10. So for booms, it must touch level 10. MACD must touch level 10. For crashes, MACD must touch level 90. Okay, so that was it for today. So we've done the settings for the MACD window and for the main window. So for the TDI, I've told you, join our Telegram channel to be able to access it. And yeah, that's it for today. God bless you. Happy trading, and make money. Get in touch. Goodbye.